Good evening, traders. Hope we're all well. So, off the back of another fantastic day, I'm going to keep the trade of the day video short and sweet. So, let's look at the last trade that we took of the day. I at 5055. We caught the move to the absolute pip using our mechanical layering entry system. Now, what we've got is a lot of sideways movement. We've got some news later on in the week, so that's predominantly why gold is moving the way it does. And these retail areas have been respected beautifully today. Now, if you trade these as supply zones, you know, 1, 2 touches, beautiful, really, really nice trades. It's actually a really, really nice way to trade. It's called smart money concepts. It's how I started trading. A couple of really nice trades out of here, but this zone was respected for way longer than usual, as you can see. 1, 2, 3, 4, 5, 6, 7, 8, 9 touches. On the 10th touch is when it was taken. It's what we've been targeting all day from around these areas, because there are stop losses at this level. And look at it. I mean, it's such a large draw on price, isn't it? Because of all the stop losses that are in this area. This is what some people will call a level of resistance. And it's just an engineered level. Essentially, the banks and institutions create this area. It's not where buyers and sellers are fighting for control. It's not where buyers can't push price through because there's more sellers. It's just engineered to make it look that way. But if you did trade this zone today, then fair play, because there is a lot of really, really nice trades out there. 400 pips here, 200 pips here, 200 pips here, 200 pips here, and so on. Now, we would have loved to have traded down from this today, but at no point did it sweep the liquidity. As you can see, we've got like a perfect straight line across. Now, had we had this move where we swept the highs and we swept all of that liquidity and we were reaching a buy, we could have then sold back down on this leg here, but we'd finished trading for the day at this point. But nevertheless, we caught a absolutely insane move all the way up. I'm still holding one runner left to go to the last runner target. And we caught a beautiful 500 pips out of it. Now, so let's look at why we took it. Now, the reason we took it is because we've got this 1 minute down close candle just in here that came down, swept all the lows here, here, swept all that liquidity. And of course, the 1 minute down close is inside the larger time frame candle here. So that's double confirmation for me. It's more than enough confidence that I need. And what we're then waiting for is another down close candle to be generated inside that, which is obviously this piece here. And again, a beautiful down close candle that swept this low or this low, and a beautiful mitigation near enough to 50%. And as you can see, we would have layered stop loss just below the zone. And then my minimum TP on this trade was all of this liquidity at this resistance area, if you like. What this really is a pool of liquidity, a draw on price. It's going to act like a magnet. And again, what's happened, even when it approached it the 5th time or 10th time, however many times it was, it gave the sellers a small piece of the pie and then obliterated their stop losses here. Look, so that is exactly why we trade institutional order flow, because we want to be in the move with the big banks, not where the stop losses of retail are. Although, be it today, they did have a bit of a party from this zone. That's all from me today, everyone. Take care, and I'll see you in tomorrow's session.